Okay, well, welcome to Introduction to Grants Management. This is a course for people who may be new to the PI position or the grants management position as a business manager within their college or department. But it's also a great refresher for those of you who already have those positions within your areas. Before I begin, I want to introduce who will be sharing this material with you this morning. We have Tiffany Boyd, who's the Senior Manager of Compliance, and we have Marie Baca, who is the Assistant Director for Grants and Funds Management. So, and my name is Joanne Callahan. I am Training and Communication for the Controller's Office. So welcome today. For our agenda today, we're going to talk about post-award accounting function, USC closeout process and sponsor reporting requirements, rules and regulations, different types of auditors and audits that they do. And then we have some other grant-related topics such as cost transfer policy. That's a new policy that has now been in place for a little while. Cost share, time and effort reporting. And then we have some information about a new grants dashboard that will be coming soon. So please look for some communication regarding training, a training webinar for that, as well as where you can find resources and people you can reach out to if you have some questions. So I'm going to turn this over to Tiffany and Marie, and just if you have any questions, just remember to use that chat box along the way. Thank you. Hey, Tiffany, I'm not sure if you got started, but your microphone is turned off.
Yep, on mute. So I apologize. Can you guys hear me now?
We can hear you. Thank you.
I am so sorry. So let me start over. I just want to thank you guys. Thank you, Joanne, for the introduction, and thank everyone for joining us today. I just want to start out by mentioning that it is a team effort, and that the course, again, was designed just to give you a refresher if you're new to grants funds management or post-award function of dealing with grants. But we always like to start out with this first slide where we talk about it being really a team effort, starting with the pre-award office and you guys at the department or the college as it relates to getting in the award, applying, doing the proposals, and actually getting that sponsor, the money from the sponsor, in the door. And then working with your post-award accountant and us here in grants and funds management to administrate the award, do the financial reporting, and get the money in the door and do all the required financial reporting with that sponsor. So again, it's a team effort. It takes all of us to make all of that happen, including our pre-award folks, our department administrators, our researchers. We're all here to support each other, and we just kind of want to start with that because it truly is a team effort, and we're here to support you guys and all the great and wonderful research being done. So that is the goal, is to support you guys and make sure that we're all, meeting the intent of the sponsor and meeting the intent of uniform guidance and staying in compliance. So we just want to kind of set the tone there with that we're all here to support each other. The clicker's not working. There we go. And then the next slide, we're talking about the post-award process. We kind of broke it down into 5 steps. The first step is, of course, the initial award setup and review of those terms and conditions. So, that's, looking at the notice of award and any special terms and conditions that you have, and looking at what kind of award do you have. Is it cost reimbursable or is it fixed price? The next step is spending of the award. Is it all for salaries and payroll? Do you have travel? Are you buying equipment and supplies? And then the third step is, of course, monitoring that award, making sure that you're staying within those budget categories and you're not overspending and you're only spending it on allowable items, and that you're not incurring out of period cost. So if the award ends 6/30, you're not incurring payroll after that point. The fourth step, of course, is final report and closeout. So if you have any subawards or subrecipients, making sure that you get those invoices, those final invoices in, if that's applicable. And then, of course, coordinating with GFM so that we can get that final report and final reporting done based on those expenses that have posted in the system. And then last but not least, the final step is audit. We always kind of try to foot stomp this. It's not, if you're going to be audited, it's simply a matter of when. We get various audit requests, and we just want to remind you guys that if you should happen to receive one of those requests, whether it's a desk review from an external sponsor, that you loop us in as soon as you receive those. So step one, initial award setup and review of terms and conditions. So the first question is determining whether or not that award is cost reimbursable or fixed price. You want to make sure that you're reviewing that budget so that you know how you're allowed to spend it, so that you know what's allowable and unallowable. Are you allowed to incur travel expenses? Are you allowed to pay participant support cost? Things of that nature. Know what your IDC rate is. That's also commonly referred to as facilities administrative or F&A cost. So they're kind of interchangeable. Different sponsors will refer to it differently, but it's all the same thing. And make sure you know if there's any exclusions for IDC, because certain expenses aren't allowed to receive it. So you've got total direct cost or modified total direct cost. So knowing the basis for which you're allowed to receive IDC on that award. That's also another important thing to be aware of for your particular award. And is there cost share required? Are there any restrictions on what can be used towards cost share? And then making sure that you're using PeopleSoft to track it appropriately. And always make sure that you're paying attention to those budget categories so that you're coordinating rebudgets as necessary, because sometimes those may require sponsor pre-approval. And we've had several instances here recently where spending over budget has prevented payment from the sponsor. And it's taken months to correct that and resolve it to get payment in the door. And in some cases, we've had to remove expenses in order to rectify the situation. So that means, the departments had to cover some of those expenses that they thought the grant would be able to pay for. So it's always really important to review those budgets. The next thing you want to make sure you pay attention to when you're reviewing the terms and conditions of your award is know what your invoicing requirements are. Is it monthly or quarterly? And is there backup documentation required? Invoices are prepared by the PAA in GFM. However, if there is backup documentation required, there's going to be a lot of coordination between that PAA in GFM and that business administrator within the department in order to be able to make that happen and to make sure that we're meeting whatever deadlines the sponsor may have. And then also make sure you know any important dates for reporting and what type of reports are required and how often they're required. So of course, then that begs the question, well, what types of reports may they be? So here are the most common types of reporting. You've got progress and technical reports. Those are generally prepared by the PI and they coordinate with SAM as necessary. However, we do want to point out that if a report has financial data or figures, those must be coordinated with the PAA and GFM, because the last thing we want to do is have a PI submitting a report with financial figures in it that does not mirror or isn't validated with what the PAA and GFM is submitting via financial reports. So if they're not in sync, it's a real quick way to get non-payment or the sponsor to stop submitting payment or reimbursing us for expenses because they don't match, because they're not in line with each other. So we always ask, please, 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 if you're submitting financial figures or data, that you just verify that information is correct with your PAA. The other type of reporting is financial reports. And again, the PAA and GFM prepares and submits those. And any sponsor questions that you may get regarding reporting or billing, sometimes sponsors will reach out to the PI or to the business manager. Always loop the PA in and direct those to the PAA if you receive those. Again, if it's related to financial reporting or billing, just because of how expenses hit our accounting system and things of that nature, please, 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 please make sure you loop in the PAA so that they can answer those questions appropriately. Again, they're happy to copy you on the response so that you're in the loop. It's not an attempt to keep you out of the loop. It's just we need to make sure that we're answering the question and being consistent in the way we're responding to the sponsor across the board with everyone that we deal with. And then last type of most common reporting are equipment and property reports and relinquishing statements. So the PAA also prepares those, and we submit and coordinate with SAM as we need to prepare those. And again, any questions that you may receive regarding those types of reports, again, loop in the PAA. So then that takes us to step 2, and that's you've received your award, you reviewed your award, now it's time to spend your award. And these are the most common types of ways you can spend it. You can spend it traveling, you can spend it on payroll, you can submit direct payment request, P-cards, purchase orders, IITs or intra-institutional transfers, or you can sub out a portion of it. You may have sub awards. So you're, taking part of your award and enlisting others to help you complete part of that research. So as it relates to payroll expenses, some important things to know is make sure that you're submitting any account change forms so that any charges are beginning and ending appropriately. So if you have a next year of funding, make sure that it's set up on the next project and starting and ending appropriately. And again, that's going back to, in and out of period charges, that we don't have out of period payroll sitting on a project that's ended. Again, if the project ended 6/30, we don't want July and August payroll sitting on it because those are unallowable expenses. And again, we want to foot stomp this as well, and we'll get into a little bit more details about this, but in order to be compliant with uniform guidance, errors have to be identified and corrected in a timely manner, and that's considered within 90 days. So it's really important that you review frequently. A lot of people tend to review their expenses at the end of the grant, but you have to do it throughout the entire grant period. You have to monitor the award throughout the entire time. Otherwise, you may have to have an expense or an error that you catch covered by an E or an A fund. So just make sure that you're reviewing the expenses throughout the whole life of the award versus just the end. And again, make sure that your time and effort reporting corresponds with the actual effort expended and is supported by payroll, so it should match. And again, if you have questions, don't hesitate to contact your payroll or HR representative. So then that takes us to direct payment requests. So these are used to pay expenses not tied to a PO or a purchasing card. These come through PeopleSoft, and these come through the work list. And so GFM, your PAA, will see all these expenses and have to approve before they actually hit the grant. The one thing we want to let you guys know is that a lot of people don't realize that corrections must be made using a journal voucher or a JV. Journal entries can't be used. A lot of people will try to make corrections using JEs, and you can't do that. You have to do it via a JV. So we just kind of wanted to highlight that here. And if you have questions, don't hesitate to contact accounts payable. And we have a slide at the end that'll give you email addresses on who to contact if you have questions. So then that takes us to IITs. Intra-Institutional Transfers. It's a tongue twister, so I have to say it slow. And these are charges for goods and services provided by another university department. So the most common ones that affect grants would be charges for postage, motor pool charges, animal care charges, and we just want to highlight that a lot of these occur at a lag or on a delay. So it's really important to consider these when you're confirming final expenses for those final invoices and reporting. And most of that backup documentation is kept at the department level. So if you have invoices or sponsors that are requiring detail level backup, like this is information that your PAA would have to come to you for and coordinate to get from you guys at the department level. So then that takes us to sub-recipients or sub-awards. So Sam completes the POs for these, and they come through PeopleSoft. And each one is assigned its own sub-agreement number and its own unique purchase order number. And then the reimbursement steps are that the sub-recipient must submit their invoice to the sub-invoice mailbox, and that is subinv@mailbox.sc.edu. And then the PI must approve all sub-recipient invoices. And then GFM is the GFM will submit those approved invoices to AP for payment. So then that takes us to step 3, and that's monitoring your award. So you're spending it throughout the entire grant period. So now you've also got to be reviewing and monitoring the award throughout that life period. So of course, what are you doing? You're making sure only appropriate expenses are charged to the grant and that you're staying within the budget categories and that overages are moved timely. And so there's a couple of great monitoring tools you can use. You can use PeopleSoft queries. And if you ever have questions on which queries are the best ones to use, you can reach out to your PAA and they can give you a list of a couple of them or the ones that we use. And they can show you, how to format them and pivot them to save you a little bit of time if you would like. But we just want to foot stomp that the general ledger is the system of record. So if it has not hit the general ledger, then we can't include it. So, if an expense, if somebody hasn't submitted their purchase card, and as a result, it has not made it to the general ledger, we can't include that expense. So it's really important that you remember that the general ledger is the system of record, and if it hasn't posted and hit the general ledger, we can't include that expense. A lot of times we'll get requests to do manual invoices, and that's something that we can't do. And that's coming all the way from the Board of Trustees and internal audit and external audit. They expect, our invoices and our financial records to match what we're submitting to the sponsor. So if it has not hit our general ledger, we can't include it. And the other most common monitoring tool that we use is the USC Finance Intranet Hub. So for payroll, that would be HCM distribution. And then all other expenses, it would be that GL dashboard. So the HCM distribution tool, of course, that's located on the hub, and that tool displays all payroll information by employee, including their pay group, their funding chart field, their gross earnings, and the cost of each employee's benefits to the project. And it gives you a complete review and reconciliation, and it allows you to verify employees are funded by the project, they're charged appropriately. That way you can do account changes and retro account changes as needed. Now we have done a webinar just on how to use this HCM payroll distribution tool, and it is located out on the controller's website under Grants and Funds Management. So if you want more information on this, please don't hesitate to go out there and review that webinar. It is recorded, and there's also a copy of the PowerPoint that we used, and it really goes step by step, showing you how to use the different features of that tool. So of course, as you're monitoring that award, you may determine that you need to make modifications. So if you need a modification to a project, always loop in your SAM administrator. So if you determine, you're spending a lot more in tuition than you thought you were going to need to. So now you need a rebudget. Loop in your SAM administrator. Or if you have a scope of work change, or the PI needs to change because the PI is leaving the institution, or something of that nature. Or you have any changes to your sub-recipients, or you need to request an extension. Always make sure you're looping in your SAM administrator because they handle all of that. We also encourage you to notify your PAA because it can affect reporting and invoicing requirements, especially if you're requesting an extension or you're changing the scope of work or you're doing a rebudget. Obviously that will affect reporting and the invoicing. So always loop in your PAA as well. So then that takes us to step 4, which is final report and closeout. So departments will receive an email from Finance PeopleSoft notifying them that the award is 90 days from ending and then again at 30 days from ending. And these will come directly from PeopleSoft. So once you receive that notification at the department, where there's several steps that you need to be doing. And the email notification lists all the various things that you need to be doing. But we're going to go over the key ones right here. So once you receive those notifications, that's really when you should be looking throughout the whole life of the award, but you really, really need to start paying attention and reviewing and balancing the expenses to the budget. Any overages or any out of period expenses, you need to start taking a look at those. You need to start preparing and submitting any needed payroll documents. So account change forms, things of that nature. You need to start deciding, do I need to set up a risk account for the next year of funding? Do I need to request a no cost extension? Do I need to get SAM involved? Those are just the type of conversations you need to start having so that you can submit the payroll documents necessary to prevent, cost transfers going back and forth. So you can set up and submit account change forms appropriately. Any closeout, you need to close out any outstanding commitments that you may have. Sorry. You need to ensure purchase card expense reports are submitted. This has been an issue. People are forgetting to submit their expense reports, or they have them defaulting to an old project, and then they forget to do the expense report modification paperwork to get them to the right project. So make sure you're getting the expense report submitted properly and to the right place the first time. And then remind your sub-recipients, if you have them, that final invoices are due. And then notify any of the service areas, so those IITs, of the account expiration or the account change. So if you are getting a new year or things of that nature, let them know, like, hey, I need the animal care charges to be charged here going forward because this account ends on this date. And then coordinate and confirm final expenditures with GFM. And again, this is all to make sure that we can meet those final reporting deadlines with the sponsor.
Tiffany, do risk accounts need to be established for every grant that has more than 1 year?
Risk accounts only, sorry, this is Marie. Risk accounts only need to be set up if you are going to have a new project set up and you anticipate the notice of award coming in late. So for example, if you have an NIH award that does not require prior approval for carry forward, we would not set up a new project year over year. Usually those notice of awards come in before the end date of the current year, so you usually don't need a risk account. However, for those of you that deal with state agencies, the state agencies might take 6 months to get us the notice of award for a subsequent year of funding. So you would need a risk account because even though the award might come late, they will expect an invoice very quickly after the award is signed. So if you have a risk account, A, it allows your payroll to continue to go, and then B, it allows us to get an invoice out quickly to them once it is here.
Thank you, Marie. Another question, how does one get on the 90/30 notification list?
So anybody listed on the project team should be receiving those 90, 30-day notices. So if you're not listed on the project team, you won't receive that. Marie, correct me if I'm wrong.
That is correct. So right now we have been in contact with IT to see if, because the project team is who runs your the workflow in the system. So what we've been trying to create is a role that will not impact the workflow, but that would be able to get the notices. So that is something that's on our radar, to be able to add additional individuals to those notifications.
That's great. Thank you. Can we have cost share on a grant which wasn't originally set up with cost share in the proposal?
Typically, no. You don't want to be reporting or recording cost share if it is not committed to the sponsor. Most federal agencies with uniform guidance, if it's not a requirement of the program, don't want to see it. We used to do that. The rules were A133 and A21, but nowadays they don't really want to see that cost share unless it's something that's in their award to us as a commitment that they're going to track.
Okay, they're good. They're saying thank you. That's what I thought.
All right, great questions. So in this example, if you have a project that ends 6:30, you would be getting an email notification from PeopleSoft on 3:30 and then again at 5:30. So then that takes us, now the project has ended and a final invoice and report preparation will begin. So at this point, we really want to foot stomp that within 30 days of that end date. So in this example, we'll say, your project ends 6:30. So within 30 days after that end date, the department really has to complete that final review and balancing of expenses and move any overages and out of period cost, and then confirm, if there is cost share, confirm that that commitment has been met. And we're foot stomping that has to be done within 30 days of the end date because GFM needs the remainder of the time. And this 30-day window could be shortened dependent on whatever the sponsor requirements are for submission. And we'll go into that a little bit more. And so, of course, once that's complete and the department completes and confirms final expenses, GFM will then prepare and submit the final invoice based on the expenses that have posted. Again, the expenses have to be posted. They can't be in process. They can't be sitting on another project and just be, oh, well, we're moving them. They have to be posted where they're going to be in order for us to invoice or report them. And then we'll prepare any property or equipment reports, and then we'll submit any financial report based on those posted expenses to the sponsor. And then we'll complete a formal closeout and close down and inactivate that project. So again, if the project ends 6:30, all corrections should be completed by the end of July. So important notes, as I've kind of already mentioned, different sponsors have different deadlines and due dates for final invoicing and reporting. So it could be 30, 60, 90. There's a few that might still have 120. We have a couple of state agencies that require the final invoice in 5 days. So you can imagine, if the department's not on top of it, there's no way we can meet that deadline because the department doesn't even have 30 days to complete their confirmation. So in those questions, so in those instances, there's extreme coordination taking place. So just be aware, dependent on the sponsor requirements, the deadlines and due dates could get shortened, and you may not have even 30 days, but at a minimum, we try to stick to that 30-day. And then all invoicing and reporting are required to match the general ledger. Again, general ledger is our system of record. If it has not posted into our general ledger, we cannot invoice or report it to a sponsor. That's an immediate audit finding otherwise. And as we've mentioned before, manual invoices are not permitted. So when we say manual invoice, that means, we can't add expenses to an invoice and submit it to a sponsor. Again, those expenses have to be posted in our system. So the department has 30 days to confirm final expenses, and that's to ensure that we have time to get everything prepared and submitted to the sponsor within the due date and the time frame that they require. And again, just because the sponsor may give us 90, you can't take 90 to start looking at it and confirming expenses, because we still need time to be able to balance all your award with all 1,000 other awards that we're also managing. So just kind of keep that in mind.
Just for everybody to understand, when we talk about needing expenses confirmed, for the months of May and June, we have 300 grants that GFM is going to be closing out. So it's not us trying to push for extra time, just so that we can sit on it. It is important because our office has an extreme volume, especially the spring and then 6/30 ended awards. Just the volume that we have, attempting to wait till the last minute, or even with the manual adjustments, trying to track all of that when there's a ton going on gets very difficult for our office. So please bear with us, over the next month or so also, that, as we're asking for final expenses and we're trying to get everything out, we have a lot due over the next couple months, because everything that ends in June, we have 200 final invoices due for between July and August. So we are trying to meet every single one of those deadlines diligently, but we do need your partnership to do that.
And obviously, any delays can affect carryover requests, it can delay reporting, and it can result in non-payment from a sponsor. And that's, worst case scenario and what we try to avoid at all cost. So again, we need your partnership in order to make sure we can meet all the deadlines and get reimbursement for all the expenses incurred on behalf of all the wonderful research that's occurring out there. And again, it's just a team effort. So then we're going to go into a little bit more detail about, the two types of grants. So cost reimbursable grants, the way those get invoiced, they get invoiced in two different ways. We can either send an invoice. So those are prepared and sent to the sponsor, and they're either billed monthly or quarterly based on actual expenses incurred. And so we'll prepare an invoice sent to the sponsor, and they'll either send us a check or an ACH directly to the bank account to reimburse us for those, or it's a draw, and we'll draw reimbursement directly from a sponsor payment system as we incur those expenses. But even with the draw systems, it's very important that we confirm final expenses and get those in, because that money can expire. So, if we don't confirm final expenses and we can't get that final invoice prepared, and we can't complete that final draw, there is a risk that money will expire before we can complete it. So it's just as important, regardless of the method, that the same rules apply. And another type that often causes confusion is sometimes we'll get a cost reimbursable grant that is set up on event billing. So they'll have a predetermined payment schedule. So instead of invoicing them based on actual expenses and them reimbursing us, they'll just say, hey, I'm going to give you 4 equal installments of $25,000. But the key thing here is a cost reimbursable grant requires any unspent funds to be returned at closeout. So even in the case of the event billing, even though they may be giving us installments up front, at the end of that grant, if we haven't spent the whole $100,000, they're going to expect reimbursement or a refund for any amount we did not spend. And oftentimes people will get confused and think that we can keep that unspent money. If it's cost reimbursable, we have to return any unspent funds.
I just want to point out to Tiffany's point with the draws and the money expiring. If you have awards through National Science Foundation, I will just let you know now they expire the money in 60 days. They get tighter and tighter. The closer you get to the federal fiscal year end, or you get closer to like 9/30 of every year, we have grants that even if they end on August 31st, the money expires September 30th. So not all federal agencies that have draws, we don't have very long to get those in. So if you get emails from your post-award administrator about final expenses, especially on anything that's National Science Foundation, please know we're usually rushing those through because that money, and once it expires, they return it back to Treasury. So that is it's gone for good type of situation. So I did just want to add that there.
Yes, unfortunately, it has, it hasn't happened often, but it has happened. So we do want to throw that warning out there. And it doesn't matter who you contact or who you plead with. They will not give it back. They will not, oh, here you go. Now you can draw. They will not make it available again. So just fair warning to everyone. And another key thing we want to point out, I know we've pretty much foot stomped this in every webinar we've given, spending out grants is specifically unallowable. So going back to, if your budget, if you were awarded 100 grand for this grant, and you get to the end of it and you realize, oh, I still have 10 grand, you can't arbitrarily decide, oh, I'm going to start shoving all these supplies or all this additional payroll to it to spend it out. That is unallowable. And auditors are specifically targeting those types of cost transfers. So, and if you want to know what, where it says that in the guidance, it's section 200.451. So please, just don't do that. Like I said, it's not a matter of if you're going to be audited, it's just when, and it's by the federal agency itself, the sponsor, the external single audit, and even internal audit now. So they are specifically targeting those types of cost transfers. So please don't put us in that situation where it gives the appearance of spending it out. So then the other type of award is fixed price awards. So on fixed price awards, any unspent funding can be kept. It's not required to be returned to the sponsor as long as the scope of work is accomplished. So the sponsor agrees to give that funding based on a specific deliverable or that scope of work. However, there is the 75% rule. If at least 75% of the award hasn't been spent, an explanation is required. Otherwise, a refund or perhaps a no-cost extension is required. So again, if they gave you 100 grand to do this particular research project or this specific deliverable, but you only spent 10,000 of it, was the scope of the work really achieved, or what changed about it to where you only spent 10% of the award? So again, make sure you're still charging the expenses appropriately so that we're getting a true picture of how much it costs to perform that research, to perform that deliverable, to perform that scope of work. So for the fixed price awards, after closeout and after the final reporting, the residual funds or the unspent funds are distributed based on the following rules. If it's a fixed price award without IDC, the money that has not been spent will be split between the university and department. If it's fixed priced with IDC, if IDC is already up to budget, the department will receive all the remaining funding. If IDC is not up to budget, the department will receive the remaining funds after IDC is collected up to the budget. Now, I realize we are in the new budget model. However, this policy has not been updated yet. And as soon as it is updated, we will send that information out, and we'll probably have a separate webinar about that. It'll be included in a subsequent webinar. But for now, until the policy is updated, we're still operating under this policy. So then that takes us to the last step. So we've closed out the award, we monitored the award, we've closed out the award. So now we get to that final step where the award at some point is going to be audited. And there's three main types of audits. You got federal audits, external audits, and internal audits. So federal auditors, they're the ones that are performing the audit on behalf of the federal agency. So those are your federal sponsors. And then you have external auditors, so they're performing that single audit, determining whether or not we're meeting the requirements related to Uniform Guidance Part 200 Subpart F. So their primary focus is financial and internal controls. And then you got internal audits. So they can perform quality controls and performance and efficiency audits. So their focus can be operational or financial. And the same thing is true with your federal or your sponsor auditors. So federal auditors, again, they perform audits on behalf of the federal agency, and they can review operations to ensure that financial, administrative, programmatic aspects of the operations are conducted both economically and efficiently. They're also looking to determine if costs are allocable, and reasonable. They can get OIG involved if they believe fraud, waste, and abuse is an issue. And they're reviewing your invoices or draws to ensure that they match expenses that have posted in the system. So again, going back to those manual invoices, number one reason you can't do it. And then our external audits, again, that's our annual single audit, so where they're reviewing our schedule of expenditures of federal awards, or what we call CFA, to make sure that it's fairly presented. And they're also reviewing our internal controls over federal programs, and they're assessing our control risk, and they're testing those internal controls. And they're making sure that we are in compliance with federal statutes, regulations, and terms and conditions of those awards. And again, they're looking at our invoices, they're looking at our expenses, they're looking at our draws, and they're making sure they match. And they're targeting specific expenses, and they're targeting cost transfers.
Tiffany, regarding spending out on an award within the last few months, does this apply to sub-awards invoicing us as well?
Absolutely. If you feel that you have a sub that is just spending out an award, the same rules apply. Absolutely. And we'll kind of hit on that on the next slide. So here is just a list of the most common audits. So for example, here we have NIH, which is the primary sponsor, will issue a grant to Clemson University, and they are the prime award. And then Clemson will turn around and issue a sub-award to us, USC. So as USC, Clemson could decide to do a desk review because pass-through federal funding retains federal treatment and requirements. So as the subrecipient, all the same rules apply to us as they do to Clemson because it's a federal award. So all those rules and regulations still apply. So Clemson can decide to do a desk review on our sub invoice, asking for additional backup, asking all of those questions. They can review our single audit. They can perform sub-recipient monitoring, all of those fun things. NIH can audit Clemson, and then Clemson and USC, both of us will both go through an external audit. We can both, and then NIH can come in and audit Clemson. So again, it's not a matter of if we're going to be audited, it's just who and when. It truly is. And remember, if sponsors are requesting backup documentation, it's because they're looking at it and it's because they're auditing it. So NIH can audit themselves, or they can have OIG audit on their behalf. So, and then Clemson, like we mentioned here, can issue subawards to other institutions. In this case, in this example, it's us, and they're responsible for all the subawards they issue, and they're required to conduct sub-recipient monitoring. And then USC, we received that subaward from Clemson from the plot, and so the funds maintain that federal status and are subject to the same rules. And so both Clemson and USC will be audited from external auditors because those awards will have to be on our CFA and audited by the external audit. in our single audit every year. So just some most common findings. These are some from NIH. This is what they most commonly find when they come in. Unallowable cost, misallocation of costs, excessive cost transfers, and delinquent closeout reporting are their most common findings. NSF, inadequate procedures for determining allowable cost and lack of approvals. And effort reporting not timely or approved by appropriate official is another common finding for NSF. And then participant support reallocated without NSF approval is another common finding for them. And again, risk of noncompliance. Sponsors have the ability to disallow expenses and require repayment. They can require additional oversight of systems and controls. They can reduce or eliminate future funding, or they can pursue other remedies legally available, including fines and penalties. And the most recent example of noncompliance is Duke University. In 2018, NIH issued additional regulations and revoked their expanded authority after discovery of research misconduct, and that included falsified research and embezzlement of research funds dating back all the way to 2010. So again, this settlement was in 2018, but they went all the way back to 2010, and it resulted in a settlement back to the government and $112 million. So again, this isn't when sponsors come in and they conduct these audits, they're not just looking at a single award. They end up looking at the entire portfolio, and then they take it back. Because if they find one thing, they end up extrapolating those results over the entire portfolio with you. And that's how you see these large settlements back. So just kind of keep that in mind, because this is huge, and this would have huge implications for a university. So how can we maintain compliance? Well, the first way is just making sure that we know those rules and regulations, including any specific sponsor guidelines. And then making sure that we're always reviewing expenditures timely to make sure that they're allowable, that the expense is in line with the terms and conditions of the award, they're allocable, that expense is providing a direct benefit to the award, and then it's reasonable. So prudence was exercised, and then making sure that time and effort reporting is completed, because that's always the first thing that they ask for. If there's payroll being charged to a grant, the first thing they ask for is, may I also see the time and effort report for the individuals charged to this grant. And then making sure that you maintain appropriate documentation. So then just some regulations to know. The first one is just, the Code of Federal Regulations that we refer to as Uniform Guidance is 2 CFR 200. And that's the Code of Regulations that establishes the administrative requirements and cost principles and audit requirements for federal awards. Section 200.430 is where it talks about charging salary and wages and the requirements institutions must follow as it relates to documenting the distribution of effort for all project personnel. So that's another important section to know. And then section 302 is where it talks about internal controls. And this is really important because uniform guidance basically says we expect you to establish and maintain effective internal control over the federal award that provides reasonable assurance that the award is being managed in compliance with regulations, and that you can promptly identify errors and correct them. So sometimes, when we get cost transfer requests that are more than 90 days old, we have to reject them based on the fact that it would be an internal control finding if we approved it. Not that we believe it's not true or that the person that the charge doesn't belong there, or it's not allocable or allowable. It's not necessarily that. It's the fact that uniform guidance requires us to have internal controls in place to catch it faster than that, and we didn't. And it would be an audit finding for the university to approve the cost transfer, if that makes sense. And the other section we always like to point out is section 406. So if you discover an erroneous error has been placed on a grant or award, that 90-day time frame does not apply. The government always wants their credit. They always want their refund. So just keep that in mind. So there's no time frame associated with when you can, if you identify an error, there's no time frame associated with fixing it as it relates to removing an expense. But depending on how long it took you to catch that, it may be too late to put it where it belongs. And you may have to put it on an A or an E fund. So then that takes us to USC's cost transfer policy. That's FINA 3.35. And again, the purpose of this policy is to set forth the University of South Carolina's requirements for cost transfers to, from, or between sponsored projects. And again, a cost transfer is a reassignment or transfer of charges between accounts. And this includes both direct charges and cost share. And again, this basically is just letting you know that cost transfers have to be processed within 90 days following the end of the month in which the original charge was initially recorded. And Marie, is there anything you want to add here?
Yeah, I think it's just important, to note the 90 days and to keep up with the costs on the projects, especially as we're trying to get reporting out more timely and awards closed out, and or handling overages, because we see a lot, an award's overspent because it's ended, and then the costs sit there for months before they're moved, and now we end up in a cost transfer issue getting it to the correct project. So it's just imperative to watch. I think payroll is probably the largest user, I guess, of the cost transfer policy. That expense is where we see the latest cost transfers.
So then that kind of takes us to what is cost share. And again, a lot of you probably already know what cost share is, but for those that are brand new, just in case we've got some of those guys here, cost sharing is just the portion of the project that's not covered by the project. So that occurs whenever any portion of the project is covered at USC's expense rather than the expense of the project. So for example, if a sponsor says, hey, I'm going to give you $400,000 to conduct this research, and USC pledges to contribute $50,000 to buy a piece of equipment that's needed for the research. Or perhaps USC agrees to charge less than the federally allowed IDC or overhead rate. If maybe we take a lower IDC rate, we're only going to charge 10% instead of the full rate. That could be considered cost share. And there is a query out there that can be used to verify how much cost share is being recorded to your project. The query in PeopleSoft is called this. And again, if you ever have questions related to the cost share that's hitting your project, reach out to your PAA. They're the best resource to help you with this. And then one thing we want to foot stomp is that most sponsors expect cost share to be charged in ratio throughout the life of the project. This has caused a lot of problems with invoicing and getting reimbursement. Sponsors have completely denied invoices because they're expecting to see cost share, but it hasn't been recorded because people are waiting until the end to record it. You really should, like if, for example, a lot of times people will use payroll as cost share. Go ahead and set those account change forms up so that it's recording throughout the life of the project. Don't wait until the end and get into a cost transfer situation to record and catch up the needed cost share that should have been recorded. Again, we've had several instances where we weren't able to collect from a sponsor for months because cost share wasn't recorded in ratio.
And Tiffany, all cost share combo codes can be identified easily because they begin with a C, correct?
Yes, as it relates to payroll, they all start with a C. Those combo codes start with the letter C. Absolutely.
I would say with cost share, more and more sponsors are watching whether it's in ratio or not, closer and closer. So you may have had an award that your department has had or your faculty member has had for, I mean, we had some, it's been going on for a decade. And now the agencies are pushing really hard for cost share and direct charges to be directly in ratio. And if the cost share is not there, like Tiffany said, we're not able to invoice the true costs on the award. And then, as you start to get cost share on the federal agencies, it's very easy for them to see that we're experiencing large cost transfers if all of a sudden cost share starts jumping by massive amounts to get caught up. So it is just one of those things where, more and more as finances get tight and the agencies are watching, it is something that comes up often when we're submitting invoices or we're doing reporting.
Absolutely. So then that takes us to time and effort reporting. So what is effort? That's the portion of time spent on any given activity expressed as a % of total activity for which an individual is employed by an institution. So that total activity may include, but is not limited to, teaching, clinical practice, research, preparing proposals, administrative responsibilities. So that must equal 100%, but it's not based on a work week of 40 hours. And the reason we point that out is because, uniform guidance, they were smart when they wrote it. They don't want to get into, how many hours somebody works. They don't care. They want to know what your effort is. So for one individual, one faculty member may work 80 hours a week. One faculty member may only work 40 hours a week. Regardless, they want to know what your effort is, because it may be different for everyone. Or you may have a student that is paid strictly by the hour and it's very clear, and it's not as confusing. But for individuals that are salaried and may work more, it is going to change. But regardless, effort must equal 100%. And so the effort report, when you receive it, it has to pull in all of that information. So we just like the foot stomp that it's not based on a 40-hour work week, but it must equal 100%. And a time and effort report will automatically be generated for any individual where a portion of their salary is either directly charged to a sponsored project or is used as cost share on a sponsored project. And the new process does include hourly employees, so that includes students and temporary workers, so that is new. And so we're currently going through that first process now. We've got about 800 reports that we're tracking down out of 3,300 total. So again, thank you guys for all your patience as we work through this new system and this new cycle. I know it's been a growing experience for all of us. So thank you for all your assistance as we continue to work through it. So, but an effort report will automatically be generated. And the key here is that it must match payroll. It should match payroll. Again, because when auditors come in, that's the first thing they ask for. Do you have a certified effort report for the time that was charged to this grant? And does it correspond with what you actually charged to the grant? That's one of the very first audit procedures they conduct. So it's really important that we get this completed because we're coming up on our single audit in July. So we're really pushing to have all of our effort reports completed by the end of this month. So if you're working on any, or if you know of anybody that's working on any, please help us out. So some exciting news is that we are working on a grants dashboard, and that will be coming soon. So you'll see some communications via email coming out about that, about some webinars and some training. So the grant dashboard will provide the ability to access real-time expense data, and you'll be able to search by PI, by the contract number, or the project number. And the expenses will be grouped in the categories as shown on the USC invoice submitted to sponsors. And you'll have the ability to expand those categories to show the detailed account codes similar to the way you see it in the GL dashboard. And it'll also show the budget and actual expenses for direct expenses and cost share. So we're super excited. I know you guys have really been asking and begging for, a tool that will show you cost share. So this will be that tool, and you'll be able to track cost share to help you ensure that you're spending within ratio. So you'll be seeing training invitations coming soon. So please encourage your PIs to attend. We think this will be really helpful. So again, more information coming soon.
Okay, thank you, Tiffany. While I talk about resources and contacts, if you have any questions, please type those in the chat box. We're getting close to the end of this presentation. We want to make sure that we answer all of your questions. Dot is asking, before I move on to the resources, how do we find out who our PAA is? And actually, Dot, and correct me if I'm wrong, Tiffany, on this page that you see here on the screenshot, you will actually see grants and contract assignments. And if you expand that, you can scroll down through there, Dot, and you will find out who your PAA is. Is that correct, Tiffany? I think you're muted. Yeah.
Dot, your PAA is
Oh, thank you.
Noah.
You want to repeat that? Because I think I said thank you while you were saying that.
Oh, sorry. Dot, your PAA is Franny Noah. I think her email says Maria, but she goes by Franny. And then if you need anything, her and I have been kind of going through as she's been transitioning since Ian left.
Great. Thank you, Marie. So for all of the resources that Tiffany had mentioned throughout this presentation, you would go to the Controller's Office website and then go to Grants and Funds Management, and we have a lot of resources out there. So anything related to uniform guidance and effort reporting, all of that is there. The HCM payroll distribution reporting tool, the recorded webinar, as well as a job aid is available there. Then we also have the new cost transfer policy and retro funding change, PowerPoint presentation, and webinar recording. So everything that we have done these last few weeks is available right there. This presentation, as well as the recording, will be placed out there today. So if you want to review it, or you know of somebody that should view this information, please direct them to this page. And then for contacts, so for general accounting, accounts payable and travel, and then supplier maintenance, all the contact information is there. They are monitoring those specific email addresses, and they will answer your questions. And then for grants, GFM contact information, for sub invoices, you want to send those questions to the email address listed here. For retro funding changes, you want to send that to the retro JE mailbox. And then for time and effort reporting, we have the GFM eCert mailbox that you can send those questions to as well. And then for any additional questions, please know that you can always reach out to your post administrator individual. And if you're not sure who that is, that information is available there, but you can also reach out to find out that specific information as well. Okay, and I think that is the end of our presentation. So if you have any questions for Marie and Tiffany, please ask those now. But know that if you come up with something later, you have some contacts there that you can, some people that you can reach out to. Okay, no questions, guys. So we want to say thank you so much for joining us today. And like I said, reach out if you have any questions. And we want to wish you a great rest of your day. Take care, everybody.